My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you, so call me at 1-800-743-CNBC or tweet me at Jim Cramer. A lot of winners today, even as the averages sold off toward the end of the session. Dow finishing off 69 points, S&P declining 0.38%, NASDAQ losing 0.12%. There are all sorts of reasons why a stock might rally. From President-elect Biden's $1.9 trillion stimulus plan announced this afternoon, to Fed Chief Jay Powell's encouraging words about the need to keep money easy. The Fed won't take its foot off the gas pedal anytime soon. Oh, there are companies like Delta that this morning on Squawk Box finally started talking about the huge boost they'll get as people get vaccinated. And then there are shortages, which are rapidly becoming my major focus. Oh, of course, we have a shortage in vaccines and in people to distribute them. That's bad for everyone. We're going to talk about that later tonight. But I want to talk about some very important shortages that are actually going on in the market that you probably don't know about. Last night, for example, Taiwan Semiconductor, the gigantic chip manufacturer, reported a stunning quarter. Taiwan Semi can't produce enough chips to meet demand, so the company's boosting its capital equipment budget by 50%. That's a bonanza for companies like Lam Research, Applied Materials that make this kind of capital equipment. And it won't be the last. Taiwan Semi, you may not know it, but that's a $655 billion company. It's the biggest. It's the giant one. And it has so much demand that there's a shortage. At the same time, every red-hot IPO represents another joyous kind of shortage. Look at Petco, the reinvented pet supply chain, which came public at $18 today, immediately spiked to $26, closed at $29.40. Makes sense. The Petco deal was 15 times oversubscribed. Poshmark, the online clothing exchange, did even better. Pricing at $42, opened at $97.50, climbed all the way to $101.50. Same story. Not enough stock to go around. Yesterday, it was Affirm's turn. That's a financial technology IPO. The shortage there produced a huge run. Started at 49, closed today at 115. Astonishing. You can argue these companies should just issue more stock, but the underwriters want to be sure that these deals work no matter what. And they do that by engineering a true stock shortage. They just also, of course, didn't count on all the additional demand from this new cohort of younger investors that you know I like to focus on. But now I want to talk to you about another kind of shortage entirely, a stock shortage that's dominating the action underneath, as I like to call it. And it's called the busting of the short sellers. That's right. There are individuals who are banding together, and they are busting the short sellers. We're seeing short squeezes after short squeezes after short squeezes. Some of them have generating such major gains that I'm talking about. Yes, take GameStop, Bed Bath & Beyond, the last 2 days. Let's talk. I don't normally discuss these issues. I don't like to talk about a short squeeze. It's not investable. I don't want to encourage it. It has to do with the mechanics of money management. You know short sellers bet against stocks, right? They want them to go lower. The way they do that is by borrowing shares from the vault of a brokerage. Then they sell those shares with a plan to buy them back later, hopefully at a lower price. The key here is that those borrowed shares must be found and be returned. Most of the time, the system works well. But periodically, and more than ever right now, you get a situation where so many people have shorted a stock that they can't locate shares to return them to the real buyers. When that happens, you end up paying a fortune to close out your position sometimes. Your broker will do it for you if you can't do it yourself. It's a nightmare. I've been caught in a short squeeze when I was at my hedge fund. About 30 years ago, I bet against a bunch of banks that everyone hated at the time. It was during the savings and loans crisis. In particular, I'd shorted shares in a bank headquartered right here in Rutherford, New Jersey. Unfortunately, so many other people had shorted it too that my broker called me one night and said, hey, listen, unless I found stock to return to him, he'd just buy it back and close out my position in the open market at any price he wanted. I couldn't find any shares. So they bought back the stock that night at a massive premium to where it was actually traded twice the level. Now, there's a short squeeze. The funny thing, the bank I was shorting, it went bust not long after. But because I couldn't locate any shares, what would have been a huge win turned into a gigantic loss for me. When you short a stock, you're always on the hook to your broker, and sometimes that blows up right in your face. And right now, it is blowing up in somebody's face big time. Yes, I am seeing short squeezes all over the place. In many cases, they are actually being orchestrated by motivated young stock buyers who are explicitly trying to crush the shorts using websites that, frankly, are a lot of fun, but I think are encouraging people to do something that I hope they continue to make money on. They may not. And that brings me to GameStop, the troubled video game retailer. For years, this stock has been absolutely hated because the whole industry's been moving online. So shorting GameStop had been like shooting fish in a barrel. But then two things happened. First, a highly acclaimed activist investor, Ryan Cohen, joined the board of directors. Got a good track record. He's the guy who founded Chewy, the phenomenally successful online pet food retailer. Second, and more important, the new PlayStation and Xbox launched, and you can't find them anywhere. There's so much demand. Suddenly, the short sellers who'd made so much money in this stock were on the run. Remember when I said there were too many people that shorted Rutherford Bank? So I ended up getting bought in. Right now, an astounding 144% of GameStop shares have been sold short. Oh, that's far more than there is. That's not right. Its shares can't be borrowed. When you can't find shares to borrow, your broker will close out your short position, which is how something like GameStop could tack on 27% today. The thing is, this is not a regular short squeeze. We have a ton of enthusiastic young buyers in this market. They love to get behind stocks and flood all the social media sites with recommendations. Think Wall Street Bets on Reddit, the popular online information site. Right now, if you go to those sites, and I encourage you to take a look at this, they're populated mostly by younger readers and participants who are plainly, openly plotting to blow up the shorts. In this case, by buying GameStop at any price and bidding the stock up, up, and up to crush the shorts so they have to cover. Get it taken up. It's incredible to watch. I think they're succeeding beyond their wildest dreams. Back in August, GameStop traded at 4. Then it went to 15 when the new consoles launched, and we realized video games would have a great holiday season. Then it jumped to $20 when the activists joined the board. And then, since then, the buyers have hit the stock message boards and urged a gang tackle of the shorts. GameStop has now doubled in 2 days. Now, with the stock just under $40, management should issue shares to pay down debt and change their fortunes. This is the perfect time to fundraise. I called them to ask them why they aren't doing it. Got no response. The short squeeze would make it so easy. Although you could argue maybe it's not ethical. It would make it easy. Oh, it's not just GameStop. There's a whole new world of stock shortages out there. There's Yum, parent of Taco Bell, KFC, Pizza Hut. They announced they're partnering with the heavily shorted Beyond Meat. So the stock jumps 13%, just like that. Or how about Bed Bath & Beyond, BBBY? That's a stock you know I like. I like it very much. After doing nothing for ages, this stock has caught fire, jumping almost 19% today. Why? Well, a poster on Reddit's Wall Street Bets wrote a piece titled, "The BBBY short squeeze starts now." And he gave you some rocket ship emojis, of course. Then, quote, "Earnings were not a disaster, and BBBY is about to burn," all caps, "the shorters with buybacks." Others quickly joined him. Of course, Bed Bath's been buying stocks for ages. I mean, this is just another social media orchestrated short squeeze, just like I saw in GameStop, because 67% of Bed Bath's shares have been sold short. Oh, boy, that makes them short sellers easy pickings. Is this a real way to make money? Listen, I actually don't like short bashing, and stuff like this feels incredibly sketchy to me. But you know what? I can't deny it's working, and my job is to show things that are working to you. The bottom line, like it or not, right now we got a bull market and short busting. And I bet you'll see more stories like GameStop and Bed Bath. I don't recommend trying to game them, but at least now you know what's really driving things.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.